Alright, what's happening, guys? Brandon here. We're going to take a little bit of time now to cover NFLX and the trades today. A little bit of intraday swinging, why we play what we play, where was support, why'd you enter there, and a little bit of the psychology of intraday swing trading here. Looking at NFLX right now, we're going to start with the trend lines, okay? As from pre-market, as we're looking at this pre-market, right? NFLX had this huge candle up, micro close down here. Sometimes you get these, and I will play off of these indefinitely. When there's a setup like this, which is a high pre-market, we're on the overhead, okay? We're coming down from previous day, something we're coming up and haven't tagged yet, okay? We find that resistance. This isn't something we're studying on the bottom and after hours and coming up. These are going to be, this is a play when something is on the top side, coming from aftermarket lows, beating those, coming up pre-market highs. This trend line that's yellow comes from pre-market. So this trend line we had at 740, okay? Right when the sell-off started happening, 742. So when this lower high was created off the candle pre-market, we took it right at 742 and we draw a yellow line. I'm going to start using colored lines to help on these video lessons. Tell me if that helps you guys or not, so they're not all red, because I'm just so used to seeing my setup. So I'm going to start, the yellows are going to be pre-market, okay? Like caution, like the, before the green or before the red, at a stoplight per se. So as this pre-market yellow line comes through at a lower high, right? So we had this resistance here. This is a big resistance that played out last few days. We had it marked off. It came up, smacked right into resistance, came right back down, and then created a higher low off that. So we trend this line, right? Trend it all the way down. Since this high, I just dragged it all the way through the day because this is going to come into play. This yellow line is. Now, one thing I do want to talk about, if you guys aren't charting this magic opening line, this is the opening dash line, okay? This is a super important line, like every day. Within my 3-day trend system, this is a super important line. You're always going to see this line on my charts. This is a 3 o'clock, right when that market opened, 3 o'clock line. Wherever this dash, wherever it hit find support, or whatever white dash is right there, you mark this out, okay? This is important, very, very, very important. So when we knew NFLX was selling off, is pretty easy play here, pretty easy read on NFLX short. Unfortunately, I was busy with AVGO and LB at the morning, but as we have our pre-market line drawn here, comes to the moving averages, and something to remember about these techs, of course, they're always going to retrace, retrace big. That's why there's 3-4 big intraday moves usually in these things. Okay, so this is our opening dash line, very important line, okay? As it comes out in the pre-market here, we have our lawn drawing. This is already here, and this is here. We're pretty much looking at this channel first thing in the morning. It's coming out. Came up in live, dipped down, pretty much got sucked right back up. This is a dangerous play. No opening play in that. There's no reason to do opening play. It is under all the moving averages. So I mean, if you've seen a little bit of rejection of the VWAP in 50 and took it for a scalp, you would have had to be pretty fast. So as this comes up, hits our magic, pre-market yellow line here and sells off, big time. Well, where's the support coming in? I have no idea. There's no play now. Our trend line is way down. It will retrace, though. When these things have big sell-offs in the morning, it has to bounce or retrace somewhere, where it got sucked up super big at 412 here, okay? It came all the way back up, broke through the moving averages, but topped out. Now, why did it top out? We always got to pay attention to pre-market movement, okay? If we draw this wick right here, where it's one of its first rejections for the day, if we draw it at that wick and see where it rejected, like we're not taking any trades yet. We're just watching this elope here. So, and we could easily kind of check this out and be like, okay, there's lots of resistance. One, because this huge wick candle closed right there. We got wick rejection here, came back down. We have, red candle here. He's a little shy of it, but you get the point. This is a good line to work off for, and now it's a rejection line. So now we have a point to go off of, right? It started to sell off. Breaks through all the moving averages, comes all the way back down. Where does it find a little bit of support? Our magic dash line. It happened in pre-market here. Started happening here, right? As it comes up, it starts rejecting the 50. This was the first signal for a short. It's holding our magic line here, this opening dash line, held it, looped it, came up, rejected the 50, closed under VWAP, started selling off. What else did it do? Crashed right through our pre-market yellow line that we already had drawn out all the way to the end of the day, right? That right there is a very bearish signal. That you could easily have took the 50 rejection and risk, the break of 414.30s. So VWAP or 50 rejection is one of my, biggest plays. Bread and butter. So the only thing with these are when it's over the VWAP, It's not as prominent. It's not always the best play, but this was a sharp rejection. You could look at that, and then the candle closed right at VWAP. That's bearish. You could have took this for 25 shares starter size as it came down, started breaking under the VWAP, and opened this weak candle right here. Added into your position for the break of trend line, came back up, could have re-added at the test of the trend line, broke back down, and had another one, with defined risk, adding into these pop shorts, increasing 25 shares each time as it respected the rejections of this line. So you have this big old fail. Big old sell-off, runs away from the 50. Now, we don't really know what's going to go on for the rest of the day here because, well, now it's in a big short market. Big short play. Came all the way down. 408. It's probably some previous resistance in here, but even so, I don't have it charted off. I deleted all the lines. I'm going to pick up that in a second here. So, as these big tech stocks retrace, caught a bottom here at 408 or 409. Why did it do that? We could back out here. We could check out some of the pre-market of the last 3 days is what I like to do, 3 or 5. So it was 409, a prominent bounce spot. These are usually all marked out. I got a ton of lines. I kind of cleaned it up just for the video lesson, but a lot of these lines, like a bottom right here at open, I probably marked that out, and then it's ultra low in pre-market. Probably mark that guy out. Ultimate dash, which is giving a little windows of time and just making sure I know where these pre-market bounces are in the last 3 or 4 days. Okay. Because for some odd reason, now you can see how my charts usually look with all these little lines in them. Coming up here, the first bounce shied away from this 408. Now, when it broke through this level, that was very prominent. It got sucked back up super fast, and it shied our first support line from a couple days ago. Retraced, which you can catch these bottoms shy of these lines, all the time. Catching bottoms and reversing. When I do swing trading now, I always try to catch bottoms. I try not to do 50 recoveries. 50 recovery in bounce is going to be scalps, and I'll show you one right up here. So as this thing kind of channels, it comes back to our 410 support, which was a big one. Kind of chop around. The 50 EMA finally catches up and just runs again. Huge dump, right? And this is actually where I got short early in the 410 area, just for the fact that I thought maybe 410 would hold up. But here's where the psychology part of the swing comes in for intraday. I don't take huge size. Okay, one more time. I don't take huge size. 50 is huge on one of these. If it moves 4, 5, 6 points in a matter of a half hour, that's huge. That's hundreds and hundreds of dollars. That's big. I started with 25 shares here. So if it does run 4 points, which it ran about 3 and some change, the opposite way, I was down $75. Is that going to break the bank? No. But I had these lines drawn out down here for support, and one earlier before I was kind of marking out these other pre's for you guys. We're going to take a peek at the daily that you're going to want to look for in today's play. We had, man, this looks messy. Let's clean some of this stuff up for you guys. Alright, pre-market, bear with me here, that's our magic dash line, still in play today. So we're more or less looking at this guy right here, okay? This is one we had in support right in that 407, and this is where the bounce was. Why did it bounce there? Well, we do have a wick support here off that all-time high. Coming up, got sucked back up, had some play. Had a huge rejection of the 407 at a close right here of 407.64. And came back down. That's also support now, because we're over that from way over here. Green candle, we got a body. I don't use the wicks too much on green candles. I'm not a huge wick fan of the green candle once in a while, but depends what the play is. And then the 9 moving average. Now those are huge, wick support, 9 moving average. So of course I'm going to try to plot this line best I can with the bodies, a little bit of the wick, and trying to get close to the 9 moving average. It obviously wasn't as high as it was right now, but it was more or less down here. So if it did happen to do a bigger sell-off for the day, you'd be able to catch that from looking at this support. Now, that being said, that's where these 407s bounced in, or that was my defined risk. Or I was hoping maybe it would pick back up at 410 because it had a big sell-off. Might not have another one, but I was early to the party. But again, the psychological aspect is I had 25 shares. This thing could have dumped points on points on points, and I only would have been down a couple hundred. So this is where I left you guys. I had 10. I'm off to the gym, whatever. I'm feeding the kid. I'm getting them all dressed and ready for the day. Didn't even see this. My hard stop wasn't until under 407 because you got to give it these wick retracements. You don't want to get caught in a stop loss. So a lot of these big techs, when they do retrace bounces, they have wicks on them, especially early day when all the volume is. There's no wicks back here. You don't see huge wicks down here. You see volume wick. These early market where the liquidity is there. Okay, so now that we have this support bucked up, it came back up. Now it hit right into our pre-market trend line yet again, rejected. But it recovered the 50. Now, recovering 50 is not a swing trade. You want to catch these bottoms, okay? Or previous supports. Now, as it rejected our trend line, came back down, well, what's this? Higher low. So as you look at this from a swing point intraday standpoint or an entry standpoint, you can see there was some support back here with this wick. Okay, we're just going to draw this line here. We're going to take away these. So it cleans it up a little bit. We'll leave that one because that was the shy line. And now when you're looking at the recovery of its low here after it dipped back down and recovered, now it's at our previous support bounce where it got sucked up. Now it recovered that, but it hit our trend line, came back down. That's an entry right there. Perfect entry for a long. Why? Because you have definitive risk. You have a low set at 407.80. You have support. You have multiple consolidation support, and you have a higher low starting. Okay, because see this wick got bought up, rejected the 9 selly, bought up. I mean, those are micro wicks, but like I said, the psychological part of it is 25 shares. At 409. So if you would have got in 409, 25 shares, it spiked up. It's a hard play to manage. This is a strong candle. But would I start a position here? Yeah, absolutely. Maybe you have support here. You have consolidation support. If it's coming back down, look at all those supports that you have. This is why picking one stock and really just focusing on that for quite some time is a very good idea. Just staring at it. My thing would stop lagging here. Dropping frames. Click it 4 times for it to manage. So this is a great support bounce, and I didn't even see it until it was back up here when I was getting to the gym, and I opened my phone and I'm like, oh, we broke through support, but ultimately didn't stop because my hard stop was under 407, with daily support. So knew it'd kind of mess around on the bottom here and hopefully come back up. Well, it did. Broke through a pre-market trend line. Okay, now this is a whole different game. This is all upside. We have a higher low that came through at a double bottom here on the higher lows, and then just ran. And now it's bullish, right? Volume comes in, starts respecting the 9 as it consolidated, hit the 9, shot back up through the moving averages, came back down, consolidated, waited for the 9, hit the 9, shot back up, big time this time, and then hit here. Now as it may be, VWAP is right here, right? Now we're looking for a midday VWAP rejection. This is something you would have waited for, or set an alert for, because one, you have resistance from its retracement back here. So even if you wanted to anticipate that, you'd be drawing out. What am I doing here? Style drawing tool. You'd be drawing out these tops a lot of the times. They'll always come into play. The retracement tops where it comes up and then it fails, and it comes up and it fails. And the reason I picked right here is obviously because we had a double support and then rejection point. There's 3 hits here. 1, 2, 3. Okay. That's why this line is prominent. That's why we don't draw a line like, right here. There's a double there. That's not too bad, but 3. 1, 2 on the wick, rejection here, 3, even you can call it 4 in consolidation. So anyway, we come back up here and we end up rejecting over VWAP. So it rejects after it comes down here, retraces, doesn't puts in a lower high. Okay, well this is short potential now. If it fails VWAP, comes back down the major moving averages, well we're in for a sell-off. So after this set was made, after this top here was made, this intraday, we were going to take the live red candle. I'm going to keep this trend line red because we're going to utilize red candles, and we're going to draw it through that first retracement, that first big buyback of the day. So I'm going to draw a line through that, and we're going to, if this part of the chart wasn't even here and we were just looking at this is what it would look like if we were coming into it. Okay, now I'm going to draw a top from there because this top failed, came down, hit a little bit of support here, came back up, had a lower high. Bam! It's trend line time, guys. It's jumped right into the first high here. You have on the candle on the live, draw it right through that sucker, right there. And then if you would have did that quick enough, as it would have sold off here, you would have seen it come back up, test the trend line, and you could have grabbed an easy point. Right there, almost 90 cents on a short scalp, just from that trend line. Okay, and as it may be, this trend line, of course, you want to draw it through as far of the day as you can because it's going to come into play again, later on. So as it failed, the VWAP for the second time had a little bounce over. You created your trend line now, right? This is here. You can see this moving averages are here. It's kind of messing around with the 200, and it loses the 200, and that's with authority. Look at these candles. The only reason, you're looking for a re-entry on a swing, right? You're like, okay, well, could I swing some shares? Could I get short? And you're looking at this consolidation, this consolidation, this consolidation as support. And well, it is support, but something to think about is how fast this is selling off. Okay, it's not really just kind of mess around with consolidation reds, and then consolidation reds a dump. This thing just dumped. It hit the 200, and then within 3 minutes, you wouldn't have jumped in right there on this crazy downward, because it snapped the 50, bounced the 100, couldn't even hold it for a minute, snapped right back under the 50 and all the way down. You're like, okay, well, I got to look for another entry, because this is not where you want to be longing right here with that quick of a move with that many red candles. All right, so you chart these out, and I was messaging Board Game Night right here. This could be a possible reentry, but this is how, again, 25 shares is going to come into play, right? You could, if you didn't see any of this other charting here, and you were only looking at, the live time here, and you were like, okay, well, it is at our 410, it's a support, it is kind of messing around there, it could hold, but if it doesn't, you size appropriately, 25 shares. Then you have defined risk from earlier in the day, right? So here's your entry. Like, okay, even if your entry's wrong at 410, you're like, okay, I'm taking 25 shares, no big deal, 25 shares. That's light. That's manageable. It breaks down under the 9, kind of spreads right, and you're just letting it go. You're just letting it go. You could even add on the way down, but you have all of this data that you already charted out. All this data is here. You have the support. You have the previous bounce. This turns into a triple bottom. 1, 2, 3, and it hit right there perfectly. And as you could have got in there and added to your 25 share position after being down 100. Or at one point you've been down, you're at 410.5, and at the absolute low is 409, point and quarter. That's not much to be down on 25 shares at 25, 30 bucks on the way down, and you found support. You were early to the party, but you managed your risk by having a small share size. Okay, there's a psychology aspect of you don't just jump in the 100 shares, because nobody wants to see 125 down or $200 down or $300 down when you have a smaller account, even a larger one. I don't like seeing hundreds down. That's no fun. That's what's going to shake you out. So as this came down and sold off, started getting extended away from the 50. See how far it is away from the 50. Look at your moving averages here. It started coming down close to this bottom, which we had great support on already. We have this line drawn. It's in the 409 area here. From the first buy, first buyback here, or first buy up here, 409.08. All this consolidation already had a support here. This is a good solvable answer to a bounce. This should bounce here, like it could. If not, you were 25 shares here, you came down, you're like, okay, I'm down 25, 45 bucks ish with the quarter, right? Could it have gone down to lows? Sure, but you would have lost 50, 60 bucks on it. You had a defined risk. You were just entering here just in case it went up here. You were managing size, and now you're adding on the way down, because again, it retraced, it found support, came back up, right? So, and even if you draw and you're waiting for these tops, like all these unit tops are giving you the entries, and if you're drawing these trend lines, our live high there, red candle, red line, even through our next body right there at the top, right? Because when this was made and you didn't see any of this and you were just looking at this, you drew that trend line up here and you're like, okay, bad example. So you look at the full day there, I'm going to pull it too far away. So as you came down, you drew that trend line there. You're like, okay, there's the top. It's starting to sell off again. We're going under VWAP. Let's draw another trend line. Right away, if you're stalking these big tech stocks and they have these plays here, let's wait for it. And you're stalking, you're just chilling. It comes back down, find support, previous support, previous support, previous support, previous support. Look how many previous supports there are there. And moving averages. Most importantly, the 200 EMA and the 100 EMA catching up with it, and respecting the 50. They're all right there. And now, as they found support multiple times on that bounce, well, look where we're at now. We're back up. I'm still not out of NFLX. I'm still chilling at a 410 entry. Like I added to 100 shares, and that was at the gym. When it came back down, because inevitably I was already getting paid from the first up here to back to VWAP. And something to learn about these swing trades, guys, or if you want to do any of that, you need to be, if you don't want to be at your computer, like you're using Thinkorswim or download TOS, make an account, you need the free. You have to set alerts for yourself, okay? Like there's nothing stopping you from drawing this trend line, right? And from the live high, from the first retracement to the VWAP and fail, you're right. Like, okay, well, where's my biggest resistance point, on this? So I would look at this and be like, okay, we're all the way sold down, we're on the bottom, we're here, let's set an alert after it failed here to come back down. Let's set an alert for, here it's a right click and it's a set alert, it's a create alert, and we can move it to under or over, right at at any price you choose. Set these alerts. These marks will help you out, So that was an over, so it's obviously over that mark I set, but you can make an under. So if you draw a line here and you're like, this is a the floor was set here, and it starts breaking that down, an alert goes off on your phone because you set it for these supports right here, and it broke through that support. Now is the time to open your phone and watch this thing for 15-20 minutes while you're sitting around. Watch it sell off. Start a position here, 25 shares. and wait for that support bounce. Chart it out. This is why you want to stock like one stock. And we're trying to watch as many as we can and calling so many plays out for you guys, and this and that. Like sometimes it can get a little loose. You're all over the place and you're kind of losing positions. Stock one or two. Like I'm trying to trade my one or two while stocking all these for you guys and try to find some scalps for you. But ultimately, this thing, all the charting here, the data is all there for you. Trend lines as quick as you can. These are going to come into play later in the day. 1, 2, 3 different times. You had 3 trend lines you could have made off of failed high sell-off, failed high sell-off, failed high sell-off, midday. Any one of these, once you were right here to draw the line all the way through, you're like, okay, well, wait for it to retrace up to there. You could either have a rejection here to come back down, or it's going to go over. You have to play it. You have to watch your moving averages here. After this one, to cover this part again, where I was talking about re-entering here and smashing through there, being under the 50, that's why it wasn't a good ad. It was breaking all the moving averages. Why was this a good ad on the upside? Because it was recovering all of them. It was respecting the 9 so well. Now we're on the inside. This is literally inverted of each other right here on this VWAP tag. Candles are up, respecting 9, pull, respecting 9, pull, respecting 9, pull, consolidate, drop, 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 drop. 9 starts rolling over, crosses the 200, super bearish, comes down. Retrace, you could have reshorted the 9. Retrace, could have reshorted by the 9. Retrace, could have shorted the 9. You know what I mean? There's always, it's inverse, all on top of the 9, all on the lower 9. And any of those retracements on those micro scalps are all takeable as well. Just practice with those. One last thing I want to cover here is this very important line, which you could have easily seen was going to be a short, here, or a long to the recovery. This is a line that I always use, is that opening 3 o'clock. Let's do a fun one here. We're just going to clear all the stuff we got here. Yeah, Windows. I'll get to that. Right, we're going to draw a flat line. Even if we're using those lines, like check this guy out, right? I want that mark because that was the low of that opening 3 line. And I'm going to go to the previous days because I like to use 3 days worth of lines here, right? Turn to the 5 minute. I think we're on the 1 day one. So we're going to take a peek over at previous days dash open. And the open 410 right at 3. So dead nuts 410. No, could have been a penny closer. Anyway, so now this line at 410, that's why 410 was our was one of my lines I watched for, and why it was a support, because this is the opening price, the 3 o'clock price open on yesterday's pre-market, right? We're going to drag that over. Look how it correlates, even just that line from yesterday's 3 o'clock dash line. Like that correlates with playable moves here, and it doesn't look as nice because it's on the 5 minute. So let's do the 1 minute. And this thing is going to correlate with stuff. You see the bounce there. It's going to get sucked back up past it, broke down, super panicked under it. Grind up to that, had a little bit of fuzz, broke over it, came back down, failed to 50. But with these lines and with the EMAs you use at the exact same time, those dash lines are going to be one of the most important lines. Even if you're just going to draw the pre-market dash lines per day, and the trend lines off pre-market highs through or lows. It's the same way. So psychologically driven, you have to be sizing down. There's no reason you need 150 shares for a scalp here or a swing long. Yeah, it'd be great to hit all 5 points with that many shares, but psychologically, can you hold that? Can your account hold that? Are you going to be able to stop looking at your phone and walk away for a little bit, knowing that you might be down 100? Okay, that's not going to make or break your account. Make sure you're sizing appropriately. 20 shares. Even if you don't want the extra 5. You had multiple points here for support. Lots of intraday plays there, and those trend lines are important, right? Trend lines mixed with the EMAs. You just got to watch what's over, what's under. So I hope you guys got a little gatherment from that, and we're gonna go check out some other swing trade ideas for the week, and I'll most likely see you guys next week, seeing as I work till about 4:30 in the morning on Saturday or Friday morning. So, all right, take it easy, guys.